Now, the latest cryptocurrency news, well, there's a lot of it floating around out there. We've got news about Celsius and the fact that the judge is ruling in the Celsius bankruptcy case that, well, no, the money is not actually yours. If you deposited money on the Celsius platform, it belongs to Celsius. I want to briefly discuss that, but I want to talk about how the cryptocurrency space is hitting the real world banking sector. Got some pretty interesting articles floating around out there that say the cryptocurrency space is creating a bank run. Very similar to what we saw during the Great Depression, but it's the opposite. So there's some similarities and some differences in there. But the differences being, it's not the lenders, it's not the banks who could be in trouble. It's the depositors, those that are sending money to the banks that may be in trouble. So let's discuss the latest cryptocurrency news. And of course, if it sounds like something you're interested in, let's get started. Let's get started. What's up, everybody? I'm Clay. I'm here to make 2023 the best year ever. If you haven't clicked that subscribe button, make sure to subscribe to the channel. Join us, become a bro. We are here every single day, and we are growing our portfolios together. And look, if you're brand new to investing, you don't know how or where to buy stocks and crypto, you got a link in the description below for Webull. It is super simple to set up your account. Any deposit, you guys are getting at least 6 free stocks, up to 12 free stocks, and $1 crypto trade gets $5 in free crypto. Crypto exclusive exchanges. You can buy, sell, trade, short, leverage, all of that good stuff. You've got KuCoin and Binance down there. KuCoin and Binance, they offer rewards for the more active traders. So the more you trade, the more you're going to earn. But please be aware, as I'm about to tell you, with Celsius, these centralized exchanges, don't hold them there. I mean, hold them there if you want, right? But they're a good place to buy, good place to sell, but they may not be a good place to hold, and you're about to see why. So Celsius, one of the first cryptocurrency lenders or exchanges to go bankrupt, the judge in that bankruptcy case. Okay, I'm going to bite my tongue on this one. I've got my opinions, but I'm just going to tell you what the judge has judged. Okay, gosh, I could get in a lot of trouble. So the judge in this case saying that if you deposited on the Celsius platform, that money is not yours. Celsius is asking for, I believe it was $15 or $20 million to be released by the bankruptcy court so that they can stay in business. The part that just boils me up, they are not in business right now. I have no idea how much they're paying this judge. I have no idea what he is looking at. But why should the people that work at Celsius get paid your money to provide zero service whatsoever? You cannot use their app. You cannot trade on their platform. You cannot collect your money. You cannot deposit any money. Yet they are collecting paychecks. And the judge has determined that they can continue to collect a paycheck using your deposits to pay those paychecks for them to provide you with zero service. Anybody, I would love, just debate in the comments below if you would like, but that's literally the dumbest thing that I have ever heard. It's literally the dumbest thing I have ever heard. I'm just going to leave it at that. I can't even compare it to anything, and I'm not even going to give you a time frame on it. The bankruptcy judge in this case, we're going to move on to a different story really quick because that is nonsensical to me, but that is what's happening in the cryptocurrency space right now. I believe, truly, because it doesn't make any sense whatsoever, that it has to be planned out. It has to be leading, I guess, down a path that they want us to be led down. If it doesn't make sense, guys, if it is so illogical that you can't define it and you can't rationalize it, it's a platform. It's a lead. It's just what they want to happen so that we get to the place they want us to go. Now, this next story, perhaps a little less infuriating, but very interesting nonetheless. When it comes to the cryptocurrency space, we know that money is down big time. Therefore, deposits are down big time. Trading volume is down big time. Revenue is down big time. And it's causing a run on the bank. Okay? You guys may or may not have heard of Silvergate. Okay, Silvergate is apparently a bank that specializes in cryptocurrency, I guess, institutions or assets. So the wonderful article, as it is, starts off as, when U.S. banks fell like dominoes during the Great Depression, the cause was often a classic run. Depositors withdrew cash en masse amid fears that lenders were amassing huge losses on bad loans and investments. This is a different one. The depositors are amassing these huge losses. The cryptocurrency era just put a huge twist on that, with depositors running into trouble first. Silvergate Capital Corp, California lender that offers digital asset ventures a place to park their cash, jolted shareholders Thursday with the revelation that it had recently survived, this is crazy, an $8.1 billion drawdown on deposits. That's roughly 70%. Even more severe than the run seen during the Great Depression. Think about that. During the Great Depression, really think about this though, okay? We are currently seeing times that are worse than the Great Depression. We are currently seeing times that caused America to run into this Great Depression. Like, this is in the history books. And we are currently seeing times that are leading that direction, okay? Think about that for your cryptocurrency news for a minute. Nonetheless, that is greater or worse, whatever you want to view it as, than the Great Depression. But in this case, the bad betting was done by the depositors themselves, a roster of crypto entities, including parts of Sam Bankman-Fried's doomed FTX empire. This is unprecedented. It is very unusual, a managing partner for the Federal Financial Analytics Service said, a Washington-based research firm. Because they were so dependent on crypto funding, they were vulnerable for a run. Given the crypto market has been very unstable, they got it. So what this article basically says is that because this cryptocurrency bank, this Silvergate, was so heavily focused on crypto or digital asset clients and digital asset venture firms that deposited assets within their bank, they ran into some trouble. It caused a run on this bank. Now, the bank is actually fine. The stock in this bank is down like 90% since the peak in 2021. The bank is not at this point filing bankruptcy or anything like that. It did survive this run, but it says it's because the bank parked all of its deposits in government bonds and securities and some safer securities. It wasn't out there lending to people and lending for high returns. It played it very safe. Now, I don't know if that's good management on the part of the bank or if they just got lucky that they didn't go out there and try to make very large returns. But nonetheless, it seems that this bank survived the 70% withdrawal rate by their customers. That is huge. Here's one thing and the key takeaway from this entire thing, and this is what the crypto news is going to be turning into. They're beginning to talk about regulating the banks when it comes to cryptocurrency asset deposits. Now, that could be the first step, because we know that the banks control the government and the government controls the banks. They have been in bed together since the beginning of time. And it is the first place that they are going to be able to dig their claws into. And when they do, and when they say cryptocurrency assets are too risky for the financial structure and the financial stability of our United States banking system, when they say that and they regulate crypto deposits in the banking sector, that is going to be the first move to kind of weeding out this cryptocurrency space and leaning out the cryptocurrency space. Is it a good idea for a bank to be so heavily invested in one sector? I don't know. Maybe not. But it's the bank's prerogative. It's the investor's prerogative that are investing in that bank to approve or disapprove of those decisions. It's not mine. It's not yours. It's, if I'm not invested in it, I don't believe in it. And it's not necessarily the government's either. But they're good at making our problems or anybody else's problems their problems. And when they become their problems, they become their solutions as well. So guys, expect massive cryptocurrency regulations, laws, bans, all of this stuff to begin taking place over the next couple of years. I do think that cryptocurrency and digital assets stand an amazing chance for growth, but there's going to be some major growing pains as well. I want to know what you guys think about the latest cryptocurrency news down in the comments below. And of course, if that button right there is still red, make sure to click it. Subscribe to the channel. Join us. Become a bro. We are here every single day, and we are growing our portfolios together. You guys got Claybro883 everywhere. You're getting 6 to 12 free stocks on Webull, KuCoin, and Binance, free Discord. And until the next time, hope each and every one of you have an awesome day.